At the beginning of this year, the man to my left told us to expect a market that was down 20% by mid-year and 35% overall. Here to apologize is Todd Schoenberger. He's with the Black Bay Group. Todd, I don't want to rub salt in the wound, but I kind of do, actually. We've got to drop roughly 390 odd points in 2 months to get down to your mid-year projection. So let's leave that kind of on the table right now. We got to get to 1,000 in 2 months. How about you?
Okay, look, so far I'm wrong. I will admit that. However, when you start looking at all the growth that we saw in the markets in the first quarter, a lot of it had to do with anticipation of quantitative easing, a further accommodation from the Fed. Chairman Bernanke has clearly put that on the back burner. It's not going to be happening anytime soon. Okay, now let's turn to earnings. I'm looking at quarter-over-quarter growth of 3% in S&P 500 companies have reported so far. A year ago, we're at 12+%. What's going on with the earnings on lowered expectations right now? I'm not excited about this market. Everybody keeps telling me how great earnings are. Whoopee. That doesn't do a thing for me. And then I start looking at all the debt bombs in Europe. They're in a recession. Slowdown in China. And I start wondering, where's the money coming from?
Now, first of all, you seem excited if we include agitated in the excitement category. The other thing is, boo and who on the earnings call. We've seen the earnings. I agree. Nothing exceptional. The bar was very low, and they all but tripped over it in terms of execution. And yet here we are. All we've seen is a slightly choppy April, but nothing apocalyptic has happened. So what's a downside catalyst? Because apparently stayed bordering on misery is not doing it for us.
Well, the earnings that we've seen so far, let's give credit to where credit is due. They've been good. This is the high point of the year. That's
good-ish on a relative basis.
Yeah, if you didn't sell into the strength of the market in the first quarter, you lost your chance for the rest of the year. Markets are going to head lower, and they will finish lower, and you'll see what I'm talking about. Look, you cannot tell me the macro data is going to support any type of sustainability in the stock market right now. Consumer confidence is going down. You looked at the jobs picture. The non-farm payrolls report was the catalyst that really started the signal of all the poor macro readings we've had recently. Right now, GDP is trending at 1.7%, Jeff, right now in the second quarter. And guess what? The Fed still can't do anything
Let me help you out before I kneecap you. The UK just slipped into a recession. Spain's going to hell in a handbasket.
Bad.
France is about to elect a fascist. All of that is horrible, and yet all of that is known, and I could have kept going for another 20 minutes. We need a downside catalyst. Tell me what's going to shock me and get me to sell stocks, because we've got to get to 817 by New Year's, or I'm going to have you back and beat you up again.
Debt. That's what it's going to be. It's a poison. Right now, the debt-to-income ratio for the American household is starting to creep up again. Back in 2008, that number was $1.40. That meant American households owed $1.40 to creditors for every dollar they received in income. Right now, it's at 1.2. It's continuing to rise for the first time in 24 months. That number right there, Jeff, where's the money going to come from? People will be defaulting. You're going to see foreclosures going up. Look, I hate to paint the doom and gloom scenario, but I'm going to do it with a smile on my face, and I got to tell you,
you're a sweetheart.
When I look forward, though, I have to wonder, where are the earnings going to come from? Because that's what traders are looking for, because we know the Fed isn't going to save us this time.
But you're a flexible thinker, which is why I abuse you so readily. Again, you're coming up with stuff that we've known for a while. We've had the inflation hawks out there saying this is a powder keg, it's going to blow up. All of which is true, and yet it's not a trade catalyst. It hasn't happened yet. The income debt American consumers consume. I hear everything you're saying about their debt, how they shouldn't do this, and yet they're standing in line to buy $900 tablets for reasons that they know and no one else does. People underestimate the consumer constantly. If we know anything about the American consumer, he's going to lever up and buy more toys. So the two things you're talking about, inflation, earning, I mean, the three things, the litany of things you're discussing are all known. They have to be catalysts. Again, sir, I asked, what's going to scare me enough to get this thing down to 817 on the S&P?
Major defaults in Europe. That's where you're going to see it. You're going to see it. Look, Greece negotiating, eliminating 70 cents on the dollar on their debt. If you start spreading that out to, say, in Italy, it's a G7 country, Jeff. You can't do that with the larger countries in that region. You're looking at $1.5 trillion in debt amongst the PIGS countries. And get this, $500 billion is held by U.S. banks.
But implicit in the acronym PIGS is that we are perhaps not having huge expectations for these guys. How bad do they have to get? It's what GDP number? Give me an over-under on the GDP so I know when to sell if Europe gets to this number.
And look, the IMF came out and said global GDP right now is trending between 2 and 3%. Very wide margin right now. Realistically, though, it should be on the lower part of that downside. But I don't think traders and investors are going to really pay a lot of attention to that. Right now, what we really want is Operation Twist to end. We want Chairman Bernanke to save the day. He can't do it. He has no more bullets in the gun. What else is he going to do? And then he turns to Congress. You heard it in his press conference. He said, we need Congress to act. And Congress isn't going to do anything because, get this, it's an election year. There's going to be a lot of finger pointing. happening. You're not going to have anything going on right now. Sentiment's going to go down. And get this, the misery index is also creeping up higher, too.
You forgot the Mayans. Other than that, they're the Mayans, the asteroids, Europe's falling apart, the IMF has no idea what's going on, everything bad you can think of. Todd Schoenberger's going to argue with you and say that it's going to happen now. Sell stocks for the end is nigh. What do you think? Why don't you put it down on our Facebook page, give us a tweet, or find this guy on Twitter.